On the daily chart, price reacted bearishly, likely due to renewed US-China trade news. I watched to see whether the daily fair value gap would hold. On the 4-hour, price displaced below the previous daily low. The fair value gap wasn't valid yet, as the candle hadn't closed. On the 1-hour chart, price also displaced below the daily low and left a fair value gap on the way down. This signaled internal order flow continuation, so I looked for sell setups on the lower time frames. For entries, I took a buy against the higher time frame trend, essentially playing a pullback. Price reached my break-even level, so I moved the stop loss. Eventually, it hit take profit. Clean structure, solid execution. On the daily chart, the fair value gap was filled, and the current daily candle formed without a bottom wick. Based on that, I expected bearish continuation. On the 4-hour, I saw a fair value gap above price as a potential pullback target and noted a liquidity sweep on the lower time frames. On the 1-hour, I confirmed the liquidity sweep and the formation of a strong low. The internal structure shifted bullish, so I started looking for a continuation trade if lower time frame liquidity got swept. On the 5-minute, there was a clear liquidity sweep and market structure shift. The fair value gap was disrespected, but price failed to continue lower, signaling bullish intent toward buy-side liquidity. I entered slightly late and kept the upcoming CPI news at 8:30 a.m. in mind. After price reached 1-to-1, I moved my stop loss below the last low. It came close, but held. I closed the trade at 1-to-1 ahead of the news release. Disciplined execution, even in uncertain conditions. On the daily chart, a fair value gap formed above the previous daily high, while another gap and key liquidity levels sat below, offering a longer-term bearish target. On the 4-hour, I anticipated a sweep of the previous daily high before a bearish move. My overall target was the liquidity resting at the lows, though I stayed open to short-term buys on lower time frames. On the 1-hour chart, I made a mistake. Liquidity above the previous daily high hadn't been swept yet, but I tried to trade into that area, expecting a reaction. On the 15-minute, price targeted sell-side liquidity. Just below, there were relative equal lows where I anticipated a bounce. On the entry time frames, I waited for the sweep and took an impulsive buy. With strict risk management, I moved the stop loss to break even. That first attempt ended up as a break-even trade. The second entry came from the 5-minute, based only on a 1-minute market structure shift, a weak confirmation. That trade ended in a full loss. On to the next one. On the daily chart, price respected the fair value gap and displaced above the previous daily high. The bias was clearly bullish. On the 4-hour, only one candle displaced above the high, so I expected a pullback as the next move. On the 1-hour, price began pulling back. At that point, I had two options: either wait for the pullback to finish, or trade short-term sells into the H1 fair value gap and its equilibrium. On the 15-minute chart, there was still no clear confirmation in either direction, so I waited for a reaction at the H1 fair value gap. On the entry time frames, I marked key structure shift points on M5 and M3. When the M3 structure shift failed to develop, it signaled a deeper pullback. I entered a sell from the M1 fair value gap and take profit was reached. Solid setup, precise execution.